10-year note yields pushed higher today, although it was a slow start to the day with a weaker than expected Philly Fed number that kept yields to the downside. Recall yesterday we traded yields all the way up to 297 before reversing back to the low 280s. Today we hung around there in the early part of the session, but then we did see yields moving higher after we had some more hawkish comments from Fed Chair Powell. We'll talk about that in a moment. Seeing yields extend all the way up to about 295. They did not exceed yesterday's highs, nor did they get to that 3% level. Again, that 3% level has not been breached since going back all the way to December of 2018. But again, yields back on track to moving higher, something we've been watching pretty much for all of 2022. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility made a big move higher today, actually back to the year-to-date highs. And in fact, the highest we've seen pretty much going back to the onset of the pandemic in March of 2020. So volatility on the move as yields are moving higher, again, given some of the information we got from Mr. Powell today. Now, what was that information? What did Mr. Powell say that shook the markets up? Well, Mr. Powell talked about more aggressive rate hikes in the near term. Not talking about down the road 3, 6, 9 months. He's talking about over the next month and a half to less than 2 months, seeing 50 basis point rate hikes at each of the next several meetings. Now, the market had heard about this from Mr. Powell's associates at the Fed, whether they be Fed governors or presidents, but hearing it from the Fed chair himself really shook the market. So the market reacted. We saw short-term yields moving higher a lot faster. That caused those treasury curves to reflatten, not as aggressively as we had seen a few weeks ago, but clearly the short end seeing yields moving higher faster than the 10-year and the 30-year, although both of those were up higher today, just not quite as aggressively. So flatter yield curves, higher yields across the board after Mr. Powell's comments about the Fed being more aggressive than perhaps the market had anticipated. So 10-year note yields heading into the end of the week, a very quiet Friday economically, but clearly on the move. We'll look to try and breach that 3% level that we have not seen breached since December of 2018.